Hi, my name's Debra Beck-Mewing from the Property Frontline.
I'm John Gilmovich from Real Property Manager.
And I'm Ken from Avvora Finance. Welcome to Mythbusters, and we're here to bust myths around misleading information in the property space. So for the next 10 minutes, we'll be discussing the topic of property is no longer profitable, or you can't make money with property anymore. So I'll kick this topic off and I guess put a credit or home loan spin on the topic. But it's been quite interesting. I have heard that, because interest rates have been decreasing over the last 20-something years, or maybe a bit more than that, 25 years in general, it has been a downward trend. Borrowing capacities have increased, people are able to service larger loans, and that has a flow-on effect into the property market. With more money being available, it generally finds itself into homes and the value of property. So I think it could be quite interesting moving forward with interest rates now rising. I don't think they will rise fall, but basically that'll kind of take some money out of the property market, because people won't be able to afford the loan amounts that they had previously, notwithstanding growth in wages and things like that. You're going to find that there's going to be is accessing that type of large amount of capital, which could then impact the property. I'm not sure which way it will go, but I think just a broad influx of money and property rising in general probably going to be not will be impacted. It's not going to be a case. You're going to have to start to look a little bit more closely. But do I still think that property is no longer profitable? I think there still is money in property. It's one of those. It's just one of those basic necessities, which is shelter. So yeah, look, in terms of I mentioned interest rates going up, but your 1 year, your fixed rates are basically significantly higher than your variable. So that's something to consider. When you're looking out there, whether to go fixed or variable. Probably 6 months ago was the opposite, where you had your fixed rates comparable to your variable rates, but now that has changed. So yeah, it could be interesting in terms of whether properties are profitable or not. But I guess I'll hand over to John, unless you guys have any questions.
Okay, so I'm going to have a chat just regards to a rental return point of view, because as a practicing property manager, can you make money out of property as far as cash flow, which is the rent return and the yield? Well, for the last couple of years, as we know and we've reported, property investors in all capital cities have been wedged into a rabbit hole called the rental moratoriums. And that happened around the country. And as a result of lockdowns, hardly any immigration, and of course an oversupply of rental property has basically forced the hand of many investors to reduce rents, and some of those have been quite dramatically reduced. So property investors for the last couple of years have really had a hard time with diminishing returns, and their cost bases either staying the same or going up, because your rates, your outgoings, your strata levies, the special levies, land taxes and all those things, despite those who qualified for any rebates and deferrals in mortgage repayments, have financially had a pretty hard time. But in 2022, Deborah, if you can just bring up the PowerPoint, in 2022, turned the corner, and the rental market now is starting to do a comeback. So let's have a look at what's going on the rental return space. We can see there where I've marked it out with that red arrow. We dipped in 2020 around sort of March, April, when lockdown started occurring, and rents dipped, especially in the market that I work in, which is the Sydney metro market, across all the dwellings. Softer landing on the houses, but certainly the apartments were pretty badly affected with discounts of 20 to 30% in some cases on the rents. So it became basically a tenant's market. But as you can see, as we're coming out, things are starting to relax, the economy is starting to return into some normality as to where we are now. You can see quite a sharp rise in rental returns, in particular in Sydney. We'll move on to the next slide. Have a look at our other capital city, south of the border in Victoria, also quite a heavy saturated marketplace with apartments. Also had a pretty big dip in rental returns across the apartments especially, not so much in the houses. Been pretty flat there up the top there, that red line, been pretty flat and steady. And that's simply because that is, houses are always a product that's not in oversupply like apartments are. So rents have been pretty steady and started to move up in around 2021 and 2022 and starting to stabilise at this point of time. So let's have a look at the next slide there, Deborah. Brisbane, so concentrating here on the East Coast, because as times have it, I can't cover the whole of Australia, but the East Coast, where predominantly 70% of the population lives, you can see again very sharp rise in the houses and the apartments from the flat line that was in 2020. And of course, we know that Brisbane experienced quite a large surge in numbers of migration from Sydney and Melbourne, those looking for a lifestyle, of course, affordability issues, and of course, that great sea change, as we like to call it, has brought quite a lot of migration from Sydney and Melbourne and other parts of Australia to come into the Brisbane market purely for affordability and a change of lifestyle. So that's had a terrific effect on the market there in Brisbane, especially on the rents. And from what I understand now, it's quite a very tight rental market there in Brisbane at the moment, and there are queues of renters lining up for rental properties across both apartments and houses. So Brisbane doing very, very well. Moving on to next slide there, Deborah, number 5. Again, coming back to, well, can we make money out of property? Well, last 18 months been pretty tough. Diminished returns in most capital cities, but it's starting to come back. We've turned the corner now. Everything's coming back to some normality with CBD workers also coming back to the cities. Do want to live close by to their offices. A lot of the corporations are starting to reel back, their workforces back into the offices. You can certainly sense that, if you hop on a city bus or a train these days, it's absolutely packed out with people, as opposed to during the lockdowns where hardly anyone was on public transport at all. They were basically working from home. And now the workforces are starting to come back. The economy is starting to open up. And the corporations do want their workers to come back, even if it's a 3-day-a-week capacity. And that means, most workers around the CBDs don't want the long commutes, and they're going to be parking themselves pretty close by to their work locations. But overall, 10-year period, rents have done pretty well with house. Obviously, again, being the stronger of the dwelling type with rental increases. But apartments haven't done too badly as well, with almost 25% growth over the last decade. So while we have this situation, we experience, the unprecedented situation and the market went sideways or backwards, if you like, as far as rental returns and yields, certainly we can see now how quickly it can bounce back and start moving forward. You don't have a pandemic. Great news for property investors on that front, starting to see rents returning back to normal and moving forward from here on, as long as we're not locking down the country and locking down businesses and all those things that came with the great pandemic. Having a look at this particular graph, this is supply. This is statistical supply of where we're at as far as dwellings. And this is just showcasing I don't see if you can see the numbers there, but they're negative percentages. So this is showing the undersupply that we've got as of 2022 across each capital city. So that's the dwelling undersupply currently based on the demand that's in the marketplace as far as the total rental listings that are available and the number of tenants that are seeking. So we're hovering there. In particular, obviously, Sydney, I just marked there, almost 23% undersupply. So Sydney's heading, the rents are moving. Rents are moving forward. They're starting to increase. And we're now seeing quite large attendances at open homes and multiple rental applications. So we haven't seen that for the last 2 years. So again, very, really positive news there for the property investors, and of course some challenges coming up for those looking to rent a property. Let's go to the last slide there. Well, rental market as of March, this is SQM researchers' last statistics around the rental listings. Well, the headline there obviously is rental vacancy rates to fall to 1%. Now we haven't seen 1% for about 5 or 6 years. So 1% is really, really a tight rental market, and that's pretty much going to be across all of the major capital cities as the economy is returning back to normality. Immigration, international travel, businesses are back. As I saw the news this morning, a lot of the restrictions now are basically dwindling away. So we are looking at we could be heading into a bit of a rental crisis, to be honest with you, the way it's going, with a mass undersupply as developers and builders are either going broke, building materials are going up, so the activity of supply has stopped or diminished for some of the developers, or some projects will just not be able to go to completion. So we've got all this prepped up demand, and we are currently heading towards an undersupply of dwellings, which is, of course, the great political football at the moment, given we've got a federal election coming up. And you can certainly see quite a lot of news on the front of housing affordability and what the government thinks they have a solution in regards to that, with all sorts of scheme incentives and tweaking at the edges, which it's just not going to, it's just political promises, I guess, but doesn't seem to be any solution in sight, which is supply. We need supply, and we need it quickly.
It is a full-blown crisis, rental as well as housing, and we really need to address it. I have my views of what can be done, but it's really a multifaceted issue, and very important that we address the problem. But getting back to the topic, thanks for that insight, John. I'll just share my screen again, showing my overview. And maybe we do need to have a bit of a chat towards the end of this from all our perspectives on this very topic. We've got a lot of scaremongering at the moment because we've got this federal election on. And as always, now we're hearing that they're leveraging the change in interest rates to say that all the money is going out of the property market. And while there will be some losers, really, when it comes down to talking about the property market or property in general, we always need to take a step back and discuss who we're talking about, who will lose out in this market, and will there be any winners. From my perspective, you can always make good money in property as long as you get tailored advice. So first of all, if you're a home buyer or an investor, the rules are quite similar. Just do quality due diligence and don't overspend. So the other thing to remember is that we always say this, that the media headlines are misleading. So you'll see a headline and it won't have enough detail in the actual story that will make it relevant for you. Of course, social media is mostly biased. Everyone's got an agenda or really don't know what they're talking about. And as I mentioned, to be really successful, you need to work on your own plan and look at things from your own perspective. So all the noise has to go out and focus on what you need. Once again, talking about interest rates, remember there's more than just one statistic. So you need to consider the full range of stats. And so not only about interest rates, but about vacancy rates, as John was mentioning, which are plummeting for a number of reasons. So that is actually pushing rents up. So it's actually more profitable for investors, trickier for tenants, and we need to sort that out. But of course, unemployment, again, a very interesting topic with the election and for Albo not getting it right, but the unemployment rate is dropping, and that means there's more money generally in the economy, and you need to look at real ownership stats. We'll hear people, I actually won't mention any names because you know who I cannot stand, people who will talk about the numbers but they don't understand the property industry, and usually they don't even actually have any property, they're coming from the shares perspective. But there's people saying, oh, you know, because interest rates are increasing, people are going to have to sell their properties because they won't be able to afford repayments. But the real stat is that probably more than 95% of property owners have a loan to value ratio of 75% or less. So that means that because of the increase in the value of properties, there's actually been more money created for those who actually owned property in the last, say, 5 years. And a couple of interest rate increases that's not really going to impact them. Many have more than 50% of an LVR, so they've actually got more equity that they could recycle into buying more. You know, with the combination of really what's going on, the headline screamers really, I just think they're really off the mark. The other thing you need to do is interpret the stats correctly, and this is one that drives me crazy. So this is the latest CoreLogic report on change in dwelling values. So that alone, that headline is a bit misleading. You need to understand what they were trying to say with that. You can see here February 12th, that is, yeah, so the last 10 years. And they're saying, oh, you know, we've had this change in what they say is dwelling values. But what they're actually talking about is the percentage change of growth. So they're not saying prices have increased or decreased with this slide. What they're actually saying is the rate of growth has changed. And you'll see so many market commentators, you know, flap their arms about this, but prices are not dropping. Anyway, so the other thing to think about is what John mentioned is supply. Really, when it comes down to the nub of the issue, we haven't got enough property for the people that want it, and more importantly, we haven't got enough property in the right places for the people that want it. But at a high level, the number of dwellings, according to CoreLogic, that we have in Australia is nearly 11 million. Of course, we've got more than 15,000 suburbs, and they'll all be fluctuating depending on their level of development. And then we have the number of people living in Australia is nearly 26 million. Of course, we don't need just one property for one person, so you know that sort of muddies the waters. But the other stat that people aren't talking about is we have just opened the borders, and the government has said they're going to allow, I think there's a cap of about 160,000 people that they will let in annually, and this could increase. And of course, then we've got the unemployment rate of 4%. You know, when you look at the real numbers, there's still not enough housing for the people that want it. Then the other side of the argument is there's still multiple ways to be profitable with property. So things like renovation, adding extra dwellings, renting out rooms, subdivisions, the list really is almost endless. And I, of course, have an ebook that I've titled How to Squeeze More Cash Out of Your Property. If you need it, make sure you contact me. But really the bottom line is buying well is still the key. So good due diligence and buy within your budget. Like, you know, I honestly don't understand why it's
Simples.
Yeah. And, you know, it's just everyone with their own agendas, really confusing and scaring buyers or owners who think, oh, my, you know, like they're being quite fearful about what could happen. So comments on that?
Well, that's why we have Property Mythbusters, don't we, Deb?
Yeah.
There's a lot of, obviously, misinformation that goes on in the property space. And we know, you know, quite a lot of the industry is really there not to help you invest, but to just sell you something,
well,
you know, despite the repercussions. So
about investing, it's also property buyers. How many years have we seen this? Buyers will work on their deposit and now they're getting more help than ever, which is great. And then they'll be fearful. So I'm talking to people now who are like, right, I've got this deposit, but I'm going to wait another 6 months because prices will drop.
I guess I have always thought of even home buyers, they're still investing. You know, they're parking a lot of money. They're parking a lot of money into an asset, which could be a complete disaster, or it could be a great, you know, wealth builder for them. Though they don't consider themselves investing, well, they technically are. You know, they're going into an asset.
That's right. But
that's where it pays, you know, to engage, you know, professionals that have been in the game for a long time, have personally invested.
You either need experience or you need good advice.
Yeah, you need to have done it.
Keep it simple. But from Ken's perspective, I take your point, Ken, that people are less effervescent with their offers now. So, you know, me on the front line, I have a little bit more time to actually assess a property, or we all as buyers have a bit more time to assess a property. Whereas only a few months ago, people just like throwing in offers, a property sight unseen, not really giving much of a care to their, you know, their main offer price. But have you seen real changes in the people that are coming to you for finance?
Like, are they being more cautious? Are they being more cautious, or just kind of just throwing, I just want to buy this for the sake of buying it?
No, so there have been a few who are keen to invest or want to do stuff with their money. I think investors are probably more inclined to do stuff like that. Kind of say, hey, there's an opportunity cost if I don't put my money somewhere. It's just sitting in a bank account, you know, generating not a lot of income in terms of interest from a savings account. So they do want to do something, but I don't. Homeowners not so. They're probably more. They're more the type to get kind of cold feet or kind of think twice about committing. But because this is a big amount, investors do see it differently. So I think investors are keen to kind of buy something. I wouldn't say they feel like it's not a situation where they're like, if I don't get my money in there, I'm guaranteed. They're still pretty switched on in terms of where to go. I mean, with something.
Yeah, and I guess that goes to show the type of clients you have. You've got the smart ones.
Yeah, I mean, yeah, we've had a few, Deb. Yeah, they seem to be quite switched on and they know where to go. But yeah, it's usually the first time buyers who are a little bit more hesitant and, you know, kind of sit on the sidelines, or they're kind of looking but not really committing. But I find that once they kind of see the market kind of takes off and swings from, you know, maybe a buyer's market to a seller's market, yeah, things start to change quite quickly, and they realize, okay, look, I've got to make a move. So yeah.
Yeah, it's tricky. But
How do you find the clients yourself, Deb? Do they seem to be a little bit more hesitant, or do you find that they?
I've got kind of a split client base. So my experienced buyers, as soon as there's like any market hesitancy, they are on the phone like, oh, thank goodness it's time to buy now, because they don't want to buy in scorching hot markets. And the more inexperienced people are like, you know, is this a really good time? Maybe I'm making a crazy decision. Maybe I should wait. And yeah, I don't put any pressure on people. It's really up to you as the buyer. But it's really heartbreaking for me to see people stop their forward motion just because there's like a little bit of scaremongering about the market. But anyway, that's the way it goes, I guess. Alrighty, so thanks very much for watching. We'd love to receive your feedback. Please join the Property Mythbusters group and send us questions or myths you would like busted. You can also contact us directly through our company websites, John at realpropertymanager.com.au, Ken at Avvora, or Ken H at avvora.com.au, and me at Debra at the Property Frontline. Actually, that's incorrect. It's Debra at propertyfrontline.com.au. So that's it for us. Thanks a lot. Bye.
See you.